Attendees are in listen-only mode.
Hello everyone, and welcome to the webinar Make Your Data Matter, 3 Ways to Instantly Validate Your XBRL. We're going to give a couple of minutes for some late arrivers, but we're going to start pretty prompt here because we've got a lot to get through. So thank you for joining us, and I'll be talking to you in 2 minutes. All right, hello, this is Jordan Woodard to kick off the webinar. I just wanted to go over a few housekeeping items. You can see in the GoToMeeting panel on the right, there's a question dialog box. If you have questions throughout the webinar, feel free to ask. We'll be answering them at the end of the webinar. And also to receive the CPE credits, you will need to answer the polling questions throughout the slides and the follow-up survey. So after the webinar closes, there will be a small survey. Just finish the online questionnaire, and we'll get you those CPE certificates within a few weeks. Also, if you have any questions or concerns, feel free to email info@rivetsoftware.com. If you have anything, you want to give us any feedback outside of the polling questions, please feel free to email info@rivetsoftware.com. Also, if you have any technical issues, please enter those in the comment box, and we'll address those if you have any issues with the GoToMeeting whatsoever. And then finally, after the presentation, we'll be following up with the slide deck within a few days. So kicking things off, the webinar is titled Make Your Data Matter, 3 Ways to Instantly Validate Your XBRL. I'm Jordan Woodard, Compliance Manager at Rivet Software, and validation is my job and it's what I do. And also joining us will be Campbell Pride, the CEO of XBRL US. He needs little introduction in this space, but Campbell will be also covering the slides and talking to some of the issues we see in XBRL. Because we're talking about errors and things we've seen in XBRL, my company's asked me to give the following disclaimer: the views expressed during this presentation are my own and do not reflect those of my employer or its clients. I remember having to say that same quote when I worked at the SEC, but I didn't know I needed it for the software company that I've joined. Just to go over the agenda, we're going to cover why correctness matters, set the scope, and tell you what we've seen and why it really, really does matter to get this correct. Also, how validation can help. So correctness, it takes a couple of different knowledge pools, but validation is one specific area which we'll focus on today to help you get the correctness of the data you want. We're going to cover 3 layers of validation. The 3 layers being XBRL specification as the biggest outside layer, the Edgar Filer Manual, what the SEC requires, and then US GAAP, so requirements from US GAAP that can be validated against to ensure the correctness of your XBRL. We'll do an example at the end just to show you what it looks like from a preparer standpoint of validating and correcting in Rivet Software's Crossfire, and also we'll send the XBRL files that we create on through the XBRL US's consistency suite just to show the slides and how they correspond in a real-life situation. So the goals, first I wanted to outline who this presentation was intended for. We've had nearly 400 registrants, so we have registrants to the webinar, and we have all types of different personnel. But we're gearing this particular CPE presentation to financial reporting professionals. Any accountant that is in the accounting practice and wants to know more about this XBRL thing, practitioners in the XBRL industry, and the primary goal we're shooting for is to gain knowledge on XBRL validation. So coming away, one of the takeaways you should have is what to look for in validation tools and what validation tools can do for you. Not only how it works, but where does it come from? What is the authoritative literature that makes this validation pertinent to what you do? We'll cover that. We want you to definitely, again, learn how to leverage the validation software to improve your process and your quality. We're just solely focusing on validation, so that'll help us really get a good understanding of validation and how it's used. And of course, the last is to see the real example, and we'll show you that at the end of the presentation. So the first polling question, let me just pull it up here. It's just to get a gauge of the audience. Your role within the organization involves which of the following? Creation of XBRL formatted data, meaning you create it or have some involvement with actually tagging a document and creating those XBRL files. Usually those files are submitted with the SEC. Number two, you review the XBRL formatted data, so perhaps you don't actually create them, you don't make changes to the XBRL or apply tags, but you review the tags to some extent. You might be a financial reporting professional non-XBRL. That means you're probably in the space where XBRL applies, but not really related to XBRL. Or finally, none of the above. So I'll let these come in for just a few more seconds. Looks like most of the voters have voted, and the top attendees, 35% are financial reporting non-XBRL, and about a total of 40% are somewhat involved answering A or B. So just to go over the benefits of XBRL, and Rivet Software as a preparation company, we really capitalize on the benefits of XBRL because we also have a consuming software called Crossfire Analytics, or interactive reporting we call it. And so when we have XBRL, it allows us to do a couple of things. Since it's in XBRL format, the data is not hidden within paper documents or electronic PDFs because each number has metadata around it, and it's tagged. I can easily go look for who reports maybe a given concept, and I can actually see who reports that across all companies without even opening a paper document. Quickly and easy discover facts. Again, I had somebody ask me for information on what filers disclose supplemental oil and gas disclosures, because there's a tag for certain concepts in these supplemental oil and gas disclosures, and for the disclosure itself, I'm able to find out what companies report this without hesitation and without having to go look through paper documents. Automated is better than manual. Previously, before XBRL, what would happen is you'd prepare your document, you'd put your language in there, and a data aggregator would read that language and then interpret that and put it in their data model. But now you tell your financial story with the actual tags, and so there's no misinterpretation of how you told your financial story and how it was perceived when it was read. So that's one of them, and as we know, XBRL ties the accounting in your paper document to the US GAAP codification via GAAP elements, and so automated is definitely better. And it helps us gain access to data. Before I had to go read through, I didn't even know what public companies were going to report 10Qs or 10Ks or what was going to be included in those, but now I get every single one of them through the SEC's RSS, and I can actually start to analyze that data much more efficiently. So users of XBRL data, just to let you know who's using it right now, definitely we have a number of users using it in a number of different capacities. I put on Morgan Stanley here. I have a quote from a case study from XBRL US's website from Morgan Stanley. They found the use of tagged info gave them a greater level of consistency, accuracy, reliability, and perhaps most importantly, timeliness. KU is a university. They have an annual convention all about XBRL, and they're looking at it and figuring out how to use this data in an academic setting. Deloitte, this is an example of one auditor using the data. They do some risk analysis based on the XBRL, and they're definitely in the space, educating the market amongst the other auditors. University of Hawaii is just another example. Another plug for me, I teach at Regis University, and we're training our students how to create XBRL, and in doing so, we actually look at example instance documents of XBRL in our analysis. Ernst & Young, another auditor. Thomson Reuters, this one's unique for us at Rivet. We actually contract with Thomson Reuters to do parsing of XBRL to feed their systems. The interesting thing about them, though, is that the XBRL they're parsing is not for U.S. markets. It's not the XBRL that we submit to the SEC. It's actually Korean markets and I believe a Chinese market. I might have to get that fact straight, but definitely they contract with us and they're using XBRL to feed the systems they already have in place. Bloomberg, I kind of threw this one on there to say, well, if it leads to all these efficiency and accuracy and all these great things, what's stopping Bloomberg from using it? And they might already be today. Who knows? It might be feeding their current models. PwC, definitely in the XBRL space on XBRL US's website. I think there's a demo of one of the PwC employees doing Altman Z-score via XBRL, and it was a pretty cool webinar. But PwC is not only doing the consumption of XBRL. All the auditors that we know are doing review of XBRL, and the American Society of CPAs has released the agreed upon procedures or Statement of Position 09-1 for agreed upon procedures on how to review the XBRL, and the auditors are definitely performing those types of procedures. So Edgar Online, another data analysis company pulling it in. Parente Beard is one of our partners, and we've seen how they use XBRL and compare against their clients' peer groups to select tags and things of that nature. And most recently, we've gotten a lot of news from the SEC about how they're using XBRL, and the buzzword we've seen in the marketplace is called RoboCop, and that's where the SEC is writing programs and using algorithms on the XBRL. There's a lot of material out there. If you just Google SEC RoboCop, you'll see that they're using XBRL to perform some of this analysis, or at least they're planning on it. And finally, last but not least, you. So we look at Microsoft Finance, Yahoo Finance, and Google or MSN Money and all the different finance exchanges to see how fast the data comes in. And for smaller companies, sometimes it's delayed like a week, and we question why. So, maybe they haven't used XBRL yet, but as soon as we see that data feeding into their system fast, you might be using your normal Yahoo Finance, and it might be fed by XBRL. You might not even know you're using it. And this comes from the U comes from an article by Mike Willis at PwC, where he says it's not about necessarily who's using XBRL, but what is using XBRL. With that, I'm going to introduce the next slide for Campbell, talking about limited liability and again, increasing on why this correctness matters.
Okay, can everyone hear me? Thank you. Thank you very much, Jordan. So just to give you a quick update on this, obviously the SEC has implemented XBRL and has asked companies who are currently filed to file both their 10Qs and 10Ks in XBRL, and every public company is now doing that. For a number of companies, limited liability has already cut in, and for the remainder of companies it will be fully implemented by August 15th. So we can go through who's impacted by that in a minute. Just cover Rule 405 is the rule which implemented XBRL as part of the SEC rule. So that is already in place, and all companies by now have reported fully detailed tag data to the SEC. And if we go to the next slide, please, Jordan. So the SEC has included the limited liability provision. They've given everyone 2 years as a chance to get all their filings correct and sort out any issues that they may have. And one of the concerning things that we're seeing is that a number of companies, now that limited liability has cut in, still have data quality problems in their filings. And obviously, one of the things we want to see is to be able to clean that information up. One of the biggest complaints we get from people using the data is that companies are making basic mistakes that they shouldn't be making. And that's really just a function of training, people having tools available so they can detect these problems, and being able to ascertain whether something is a problem or not. So if you're involved in preparing an XBRL filing, you may want to make sure that you've got a number of validation processes in place, which we'll talk about today, just to make sure that you have a more confidence that your data is correct. This is just an extract from the rule, which you can see there, and you're more than welcome to go and read that. This next slide is just really just explains the timeline for limited liability. For the first wave filers, there are approximately 495 of those. Limited liability came into effect in 2011. The second wave, with 1,200 filers, they all have limited liability in effect now. And then the final wave is for all the small to medium-sized companies. They have approximately 6,000 of those, and that limited liability for those companies comes into effect on August 15th. And this is where we're seeing the bulk of the problems in the filing. Obviously, these companies are smaller, they have less resources that they can apply to making sure that their XBRL filing is correct. But there are a number of things that you can do which can make this actually a lot less painful than it needs to be. Okay, and we'll talk about those in a minute. So if we can go to the next slide, please, Jordan. So just to reiterate this, a lot of companies outsource their XBRL to third-party providers, but the responsibility for getting the XBRL filing correct is the responsibility of management. They're the same whether you're preparing them internally or externally, and XBRL is also subject to all the disclosure controls and procedures. Go to the next slide, please. So just in terms of where the status is, in terms of how many filings we've got, how many companies have filed, approximately 9,200 companies have filed data in XBRL. Some of these companies obviously don't exist anymore, but I don't think there are actually this many filers anymore in existence in aggregate. But we've had 9,215 separate companies file in XBRL. This represents approximately 64,000 submissions today. So there's a lot of them that have come in. And as every single filing comes in, one of the things we do is we run validation checks over those filings, in addition to the SEC validation, but just make common sense type rules to make sure that the data makes sense. And we've identified about 1 million data quality problems in those filings that have been filed with the SEC. Now, there's and this is basically looking at individual fact values. So there's over 40 million pieces of data that have been reported to the SEC in XBRL. So there's a vast amount of information. Obviously, this represents around about 2% of problems in filings, and that can be a problem for folks because there are a number of companies who are mining this data and looking for anomalies and looking for errors, and they use that as a basis to make investment decisions. There was an article in the paper yesterday where George Soros, his investment strategy is looking for problems in the market which people haven't picked up, and this is kind of reiterates this, that we've got this data out there and it's incorrect. People are running algorithms over it to find the anomalies, and so any data quality problems in your filings, people who are using the data are going to find it. So this is the problem with some of the stuff is that these data quality errors, when people are trying to consume the information, are very, very easily found. And so 2% may not seem like much, but when people are making investment decisions on this data, they get very nervous if any anomalies they're picking up are not the basis for an investment decision, but of a transposition error or just information being entered incorrectly in the XBRL filing. So we go to the next slide, please. So this is, we try to give a breakdown of what the types of issues that are in the filings, and you can see here the majority of the problems relates to people putting the signs on items incorrectly. So that's basically entering an item which should have a positive balance with a negative, or entering something that should have a negative value with a positive, entering loss, for example, with a positive amount, which indicates profit. The other thing is we call it invalid members, but we'll talk through those in a minute, what that actually means. The other thing is putting in, the third biggest area is putting in the calculations, that defining when you file an XBRL submission, you need to file, what's the calculation relationship between different components of your filing. A lot of companies describe that incorrectly as well. We have a few missing calculations. The SEC requires that companies report calculations for balance sheet, income statement, cash flows. In some cases, companies are just missing those. We have items which you would expect to be negatives, but are positives, and it tails away to a whole bunch of other items. But those three big items represent a huge piece of the pie. So obviously, you know, if getting those corrected, those can be corrected and make things a lot easier for people trying to consume this information. So we go to the next slide, please. And Jordan, I'll hand it back to you to have a polling question. Thank you. Jordan, I'm not sure if anyone can hear you. Are you on mute?
Oh, yeah, sorry about that, Campbell. Simple question. We know that, well, the question before attending the webinar, you were aware of XBRL issues and XBRL filings. It's definitely in the media quite a bit. I was reading in the Journal of Accountancy, they had for the April issue, they had a 6 or 7 page spread on just using XBRL, and of course made mention of it, and that was in one of the major accounting journals. So it's something that most people have heard of. It looks like from polling results, most people have answered now, and most people have indeed heard of these issues. So I'm going to leave this open for a little bit longer just to give a couple more folks a chance to answer. And so on to the next slide. I'll introduce this, and Campbell will probably rehash what this image is all about, and this was part of our marketing materials. There's basically 3 layers, and we'll go through them, and we'll see each of the 3 layers in the example at the end. The first layer is XBRL 2.1, or XBRL specification. So that's the very technical requirements that us as a software company develop towards to make sure our software can create valid XBRL. Similar to how HTML pages can render on the internet, there's requirements to make them do that, and that's kind of what's covered in XBRL, XBRL valid or XBRL specification requirements. The next layer is the requirements for the Securities and Exchange Commission. In their Edgar Filer Manual, they outline certain rules that your filing needs to file, and many of the rules need to be followed to even submit the filing with the SEC in their Edgar system. And then the third layer, which we're drilling into capabilities of validation, and I feel like most software providers cover the first outer layer. Then other companies provide at least as much as some of the middle layer, and then the last layer is kind of what XBRL Consistency Suite checks for, and that's checking against US GAAP concepts, and we'll see some of that in Crossfire and in the XBRL Consistency Suite. So quickly, just to rehash, there's specification, the Securities and Exchange Commission's Edgar Filer Manual validation, and US GAAP validation, and we'll see examples of each. So XBRL specification consists of the core spec, we call it, which is XBRL 2.1, and that just is focusing on how XBRL documents need to be formatted to communicate. Dimensions 1.0 is going to talk about how to break things up along different axes, and we'll look at a specific example. And then there's an optional but not required section that you see in our industry quite a bit. It's called Financial Reporting Taxonomies Architecture, or FRTA, which is explaining some best practices on how taxonomies should be made and developed, and that can be applied to your extended taxonomy. So a couple of examples of 2.1, or a little bit more on 2.1. It just ensures that processors can understand the files. So when you file your filing and all the databases get updated from the SEC's RSS, it's because XBRL 2.1. And it also covers syntax, which syntax is a kind of scary word. That's another way to say technical requirements, machine-readable requirements for data types. Like when you report a monetary element, it needs to have a monetary data type. If you report, let's say, area of land, it needs to have an area item type. If you reported that area item type, we can switch over to units, and you're going to need square miles or square feet applied. And switching back to monetary, if you report 5.4 dollars of cash, and that translates to 5.4 million, It's scaled to the million and precise to the 100,000th, and that's all covered in XBRL 2.1. Also, as Campbell mentioned, calculation inconsistencies. There's a certain set of rules, which Campbell will cover in one of his slides, to show the requirements and how come inconsistencies arise, and we'll see examples of those. XBRL dimensions is just how we break up big business segments or axes. You can think of an axis like time. Things happen over a period of time. You can think about it of number of entities. You can look at facts across entities. You can look at facts across geographical segment, so north, south, east, and west, or by country, North America, South America, or however you want to look at it. It's across segments and dimensions, tells you how to do that. Another example is an axis cannot have more than one default domain. Back to the geographic regions, if I do an axis of geographic region and I have, we call them members, the segmentation is called a member of north, a member of south, a member of east. All of those members roll into something called the default domain, which is the sum of the members, and those all live on one axis. So how we do this technically is defined in XBRL dimensions, very technical. Most of the requirements should be handled by the software, if not all of them. EFM requires conformance with 2.1 to begin with, and dimensions, and it also gives additional rules. And the EFM, when you read it, it's EFM Volume 2, Section 6, and feel free to reach out to us if you want to know how to get that. It's broken out into two types of sections: syntax, which is more technical for the SEC, and content, which was previously called semantics, which is the things that an accountant can understand and needs to get right to be in accordance with the Edgar Filer manual. So we'll look at a couple of those. And most EFM validation tools address the syntax section, and they may not address the semantics section. We might provide you a warning just to say, hey, this is unusual based on the EFM, but it's something an accountant needs to review to really get correct, and that's kind of how we approach it. An example of syntax, I'll read this out loud, it's very technical. The source and target of an effective calculation relationship must have equal values of the XBRLI period type attribute. Very technical, but all it means is you can't add a balance sheet item into an income statement item, and it's just saying if the balance sheet has a period type of instant, it's not allowed to roll into the income statement item with a duration item, with a duration period type. The content section, we'll see an example of this. It reads, invert the sign of a numeric fact whose element has the XBRLI balance value that is inconsistent with the reporting concept being reported. And it's kind of like, what the heck does that mean? When you maybe write in your narrative, you say, well, I have losses of 5,000, and the 5,000 is a positive in your narrative, and the element you're using is an income loss element, which has a credit balance type to show income when it's a positive. For XBRL, you just revert the sign on it, and it will make that correct for XBRL EFM purposes. I've included this slide to show you some of the updates to the EFM in the new version 23. I won't go through them in detail. Most of them are either removed or relaxed because the SEC has just decided to make a few changes. I've added some additional animations in here so you can read more about them. But basically, the SEC cares less about the file name. They take away some footnote requirements because it's kind of overlapping the 2.1 spec, and this is a really good one for me personally. Numbers 6.7.6.9 and 6.8.5, or 6.7.9, 6.8.5, and 6.8.7 are all kind of relating, and it's the removal of this LC3 label camel case concatenation. This is something that's just like a best practice when you have, it sounds like what it is, when you have, let's say, extended current assets, capitalize the E, capitalize the E of extended, and it can't have a space, and capitalize the C for current, and it can't have a space, and then capitalize the A for assets, and it can't have a space. That used to be a requirement that when you extend the element that way, the label should match, and the SEC hasn't really, or has removed and relaxed things related to that error. And it's still covered in that FRTA we spoke about earlier, but it's definitely not required. Maybe the SEC views it as less important. It's just a formatting thing. So I'll just quickly get through these. Oops, and on to the next polling question. And this one I'm really trying to get at your background and understanding of the EFM and 2.1. I realize it's not applicable for everyone, but it would be interesting to know. So your understanding of XBRL specification and Edgar Filer manual consists of the following. I read them and understand their content, and it might be that Campbell and I are the only ones to answer yes to that one. I've had training on them and have a good grasp, because some aren't applicable. Your software will take care of a lot of these. You might just need to have been, have read them and read the parts that are relevant to you. Number 3 is I only know the sections my vendor or consultant recommends. I know at Rivet our tech team will always email the filer reference to the authoritative guidance, which is the EFM, recommending a certain type of change, and so we make our users aware. So that's option number 2. And finally, I have no knowledge of these documents. If that's the case, which the majority have answered, number 4 is the case. I hope that you know where to look if you ever needed guidance. So whenever somebody says why they're doing something a certain way, you can get to that authoritative guidance, especially if you're a filer. So just to give you the percentage, it looks like 63% of the attendees have no knowledge of these documents, which is understood or understandable. So I'm going to give a few more seconds on this polling question and then pass the presentation portion off to Campbell. All right, Campbell.
Okay, can you hear me, Jordan?
Loud and clear.
Okay, I was a bit quiet before, and hopefully we have that. This is better now. Okay, we talked earlier about just these 3 major classes of problems, and the first one I'm going to go through is invalid access member combinations, and this sounds horrendously hard to understand, and maybe the name of this should be a little bit better. But pretty much what this is just really categorizing a set of facts that you report in a table in your financial statements correctly. So as an example, let's say we had revenues and we said we're going to break these revenues down by geography, and you put a geography of the United States, you put a geography of Asia, you put a geography of Europe, and then you had a geography of iPads. Obviously the iPads is not geography. It doesn't make any sense to have it there. And so this is we would call that an invalid member combination. That means that one of the categorizations on an axis just doesn't make any sense. So one of the things we do is we look for these to see. We have an expectation that certain line items are broken down by certain categories, and when these categories are rational or don't make sense, we basically flag those as a problem. And so we have an example here of one of the ones that are more commonly made incorrectly. This was a little bit tricky, but you can see here. Remember that we have something called the parent member, and this is really what this is indicating. What the parent member means in XBRL, this is something that represents which is like a subheader that is used to indicate the aggregate of my financial statements less any non-controlling interest. So obviously the parent member plus the non-controlling interests is equal to my consolidated entity. The parent member is different than the parent company. The parent basically includes all of my, for example, would include all of my sales, if I was adding it up that way, or less any sales that are applicable to non-controlling interests, or more likely net income, or you may have assets, or whatever line item you're breaking down. The parent member represents the aggregate consolidated less non-controlling interests. But when most people use this element, they really mean to indicate the parent company member. So if we click on the next slide, there is a difference here. So we have, if we go to the next slide, please. Okay, so now you can see, one back. You can see that change to parent company member. And when you're breaking down, some of these items, you want to make sure that if you're breaking something down by legal entity, that it actually represents a legal entity. So on a geography where we typically break things down, if it's some kind of breakdown of your legal entity structure, you would expect people to use a parent company as the member. That actually represents the legal entity, which is the parent, not the accounting representation of the consolidated parent. So we go to the next slide, please. The second area that we see a lot of is incorrect calculation weights used. And the way the calculations work in XBRL, whenever you define two facts, you can define a relation. If there's a calculation relationship between them, you can define the fact that those two items are related. Usually this is the two items are linked by saying this item plus this item is the equivalent of an aggregate total. And XBRL has some rules in it which tries to make sure that people do this properly. So basically what it says is if I've got an item which is a debit item, let's say assets, and I have another item which is a debit, let's say accounts receivable, and I'm adding accounts receivable into assets, I should always have a calculation weight of +1 relating those two elements. If I have a parent item which is a debit, if we go to the quadrant which is on the bottom left-hand side, and I have something rolling into it which is a credit, let's say I have property, plant and equipment, and then I have accumulated depreciation, the calculation weight between those should be -1. In the XBRL, if you specify +1 or -+1 for the accumulated depreciation, or have accounts receivable minusing from assets, the XBRL specification, which is that first level of validation, will say, hey, you've got an error, you can't do that. However, in a number of cases, there are elements within the taxonomy which do not have a debit or credit balance associated with them. So as a result, net cash provided by use in operating activities is a good example. This item does not have a debit or a credit balance associated with it. So this XBRL specification check is not done. And since that check's not done, a lot of people will end up putting the wrong signs between will end up putting the wrong calculation weight between something like gain loss on sales of loans net, and as a result, what ends up happening is to make the calculation work, they'll put the gain loss on sale in with a negative value when it should be positive, or a positive value when it should be negative. So this is something to look out for, and this is particularly prevalent in the cash flows. So you can see here on this slide it's got a balance type. The actual balance is null, but really it has an implied balance of debit. The balance type of the gain loss on sale is a credit item, so the weight between these two items should be -1. Lots and lots of companies are putting this in with a +1. So one of the ways to check for this, we have built in some checks to check for these, is obviously you can run an automated check, or you could make sure that your software provider is checking for these things to make sure that they are actually working correctly. The reason that this doesn't have a balance type in the taxonomy is that one of the items that it rolls up into the net cash provided by operating activities is the net income, and for the calculation to work, this item, there are a number of items, particularly items which appear in roll forwards. You'll see they don't have a balance type associated with them. And that is the reason why it doesn't have a balance type. So this is just something you're going to be mindful of. The specification check is not conducted when an element doesn't have a balance type. Okay, so if we go to the next slide, just to quickly talk about negative items before we talk about validation. The biggest error that we do, the other one is negated values being used when it should be positive. One of the reasons this happens is when companies are adding back items, they'll put parentheses around an item. So if you have accumulated depreciation is a good example. When it appears in the balance sheet, it appears with parentheses. As a result, a lot of companies will enter that as a negative value. Another very common one is dividends. They have a dividend payment because that appears on the statement of shareholders' equity, or appears in other financial reports with parentheses around it. People enter it as negative. But the tag for dividends represents the dividends amount. It's expected to be a positive amount. If you've got an amount for negative dividends, that means that somehow you managed to get
capital paid in or get money from your shareholders which did not contribute to the capital of the entity. I'm sure that would be extremely difficult to do. So that's what that means. So negative dividends doesn't really exist in the real world, so don't tag dividends with a negative item. So what's important is when you're trying to work out if an item should be negative or not is to look at the element and remember that most items are positive, and if I'm putting it as a negative, I need a good justification to justify why this item could be negative. One of the main reasons that an item could be negative, an exception to the rule if something has been dimensionalized, if it's got some kind of adjustment applicable to it, or if it's got some kind of elimination, if it was assets, for example, and it's being eliminated, you may have assets for different entities and you may have an elimination portion of their assets to get to a consolidated amount. In those cases, the amount could be negative. So that's just something else to look out for, that software should be able to flag that and indicate that for you, so you can either check it or and then make sure that it's correct. And then just to reiterate this slide again, all these checks I'm talking about here, I've just gone through over, are really at this consistency check level. There are additional checks that are specific to US GAAP. There are a number of XBRL taxonomies that are out there that are used for different things like IFRS, we have corporate actions taxonomy, we have taxonomies that are being used by the FDIC. All of those other taxonomies can use this outer layer, this valid XBRL. There is taxonomies for mutual funds, for example, that the SEC uses. The EDGAR filing manual is a more granular level of validation which applies to all SEC filings, and then the checks I'm talking about here are checks that are really specific to the US GAAP taxonomy. These checks can't be used on other taxonomies. They're basically customized for a specific taxonomy. So these are the different levels of validation. It just gets more. So go down.
All right. Well, on to the demo portion. Hello. Can you hear me?
Yes.
Okay, onto the demo portion. I've added a slide just to show you what we'll be going through. We have our document management center. We'll show you the validation within the document. We'll show you how that translates to a report and runs through the consistency suite. So let me just jump into it real quick and get rolling. We're at about 41 or 9:41, so I need to go quickly through this. But this is our document management center. Rivet's a preparation software, so we've really approached this demo portion from that standpoint, from the preparer standpoint, and want to show you what validation looks like through the process. So this is where we have our documents. I have my 10Q and the one I was working on and all my history. It's all well and good, but let's launch the document and then see the two different types of validation. We'll actually go through the three layers. But since we're a preparation software, we do certain things. Like we prevent you, instead of validating, we prevent you from getting certain things wrong. Here I have two credit elements, and we talked about those calculation weights having to be a certain way. If I drag and drop this one, and it won't let me assign the -1 calculation weight because we have two credit elements. So it prevents us from doing that, and it pops up a message. No problem. Other things, and that's an example of 2.1 prevention. Just quickly to show you an example of EDGAR Filer Manual 6716 prevention. The FCC doesn't want you extending elements that match the base taxonomy. So right now I'm just going to extend real quickly. This is how we extend. Insert an element after, and I'm going to try to call it assets and see if our software prevents us. So there it is, assets, and it requires a definition. So in a lot of ways, all these many rules we have to validate against, they can also be prevented in a preparation software, but some things need to be validated for. So what I've done, you can see the document. What I've done is I've created a set of validation rules that we covered in the slide that are going to trip the actual validation engine. So what I'm going to do for viewing purposes, I'm going to split this screen and pull up our validator. And validator here is tied to the document. This is the HTML document. The XBRL tags are underneath. Once you click on a tag, you can review its values. And on the left-hand side is our taxonomy editor. And this is where you manage the taxonomy. So you have taxonomy, you apply that to the document, and you have the review capability of both the HTML and the instance document. So I'll click validator. And I can see my validation errors. So this is our validation screen. It summarizes some information about the error and explains the location. The first error is a monetary instant should be positive. This is just a basic rule that we know all balance sheet items should have positive values because they're never really increases and decreases unless there's some sort of adjustment. What you can do is you can double click in the software, find the error and where it exists, and I can see I have 3 of these, so it's these corresponding values. And if I wanted to look at this closer, I'd say, well, really this is assets, but it's qualified with the eliminations member. So it's as simple as coming in and viewing the table, and you can actually approve this because it applies for the whole column. I can approve it, leave a system-generated comment, and say this is okay for validation. And I'm just illustrating this, this functionality to see how you might manage these. So I'll come back into the document. We also have the ability to filter things down. So I reviewed this one. I'm going to actually filter this one out just to show you filter. So that's how we would get rid of, we've kind of justified something that needed to be reviewed by an accountant to determine its appropriateness. So we didn't have to invert the sign, what we talked about on the EFM slide. This next one is a negative that should be positive, and it's exactly that example that Campbell was talking about. There's an amount somewhere in the document where, and I'll show you this real quick, where dividends, common stock, cash would be entered as positive, and we entered it for XBRL purposes as a negative. And so for this one, I'll kind of slow down and show you how it works. So this is what Campbell was talking about. There's this parentheses in a roll forward table, so there's no calculation required for XBRL for roll forwards. And so when you tag this with the parentheses on it, it's actually like tagging a negative value. You have to tell the XBRL to invert the sign. You can see dividends, common stock is created with the debit balance type because it reduces equity. But in the instance document, you can see it's a negative, which makes it into a credit based on the data type applied. So what I can do in here is it's called inverting the sign from the EFM. We've given you the validation. Now we're going to show you how to fix it. This is just to get that instance doc value correct. And now that I've corrected it, well, let's just retry the validation and see what happens. And it clears it. So if I come back and click on the 45, it's now a positive debit. And based on what we discussed throughout the presentation, you can see how getting this correct, that might be an accidental mistake. I've just tagged it, but I didn't review each one. The goal of Crossfire is to not only validate it, but make it easy to review. The next one is kind of interesting. It's a 2-part error, and it relates to increase, decrease, and retail-related inventories. And this shows up on the cash flow in the calculation section. So what I'll show you is exactly that example where because cash flow from operating has an NA balance type, you can assign the calculation weight. Because of the indirect method of accounting, as Campbell was mentioning, because I got net income in there, it's going to let me change these weights. So when I change this weight, it's as simple as changing the calculation weight, and now I've tested against like a US GAAP, one of those central circles. I've kind of tested against one of those. It's an accounting concept. Oops, I put it in the wrong place. It's an accounting concept, and I need to know how to treat it based on GAAP. And so right now it's not calculating correctly in the calculation portion, but when I validate it, you'll see that clears not only the weight issue, but the calculation issue. So maybe the weight was just modified. So what we've seen is changing tags when I put the reverse sign on. We've also seen modifying the taxonomy to clear an error. Also, sometimes the errors occur in the source document. Maybe just the source doesn't fit. So in this example on the income statement, I'm about $1 short, just a rounding issue. So it should be as easy as coming in and modifying your source document, and now we're going to get that footing, and that's going to make the 2.1 spec calculation requirement work. And it was just a few simple errors, and hopefully you saw how these correspond to the slide. I'm going kind of quick because we're coming up on the end. I got a couple more pieces to go through. So I've done the validation in Crossfire and shown the couple of examples. Since Rivet, probably their #1 selling point is the quality of their XBRL filings because of our validation. We've also partnered with XBRL US to be able to run their consistency suite through our tool. So I'm just going to show you what that looks like. So say I'm done with my review. I'll switch it back. You can see normal Word functionality. I'm going to create the XBRL filing package and send it to the consistency suite, and I'm going to use Rivet's Document Management Center to do that. So I'm going to create a package. I can create it on a shared secure library, or I'm on my local system. Just for now, I'll create the package on my local system, and when I say create the package, I'm going to create the XBRL files and some of the corresponding files. I'll just call it Rivet 2013-0331 and save it off. And oh, it looks like I made it once, but I'll just save it again. So this is generating those core XBRL documents. There's usually 6 of them. If you're familiar with XBRL, you've seen these 6 documents before, but those are the ones that the consuming side of XBRL need to work. Oops. So I accidentally popped up the other screen. Here I can see a preview, a rendered preview like you see on the SEC of the XBRL. I can test file it, which is another layer of validation through the SEC's Edgar Link system. So we always encourage filers to test file throughout their process and test file right before they file, because this is going to give you some more validation. If it's there and it's free, just use it, and there's no additional cost for test filing. And last but not least, I'm going to create a bundle. This is how we manage documents, and I'll show you what I mean. And I'm going to include the preview in it. I'm just going to make a version 2 just to show you how it works. And then we'll go back. Version 1 is basically before I made the changes. I was going to use version 1 to show you how XBRL Consistency Suite and Crossfire Validation overlap and how there's additional checks because XBRL US has, I think, some 10,000 checks that there's some additional value add from having a third-party validation. So we've created it. I'll come over to my validation workspace, and I can see the bundle. Actually, if I refresh this, I can see version 2. You can see the preview and the filing package. I have the ability to send it right off to XBRL US Consistency Suite if you subscribe. I'll go back to package number 1. We've already sent it off, and once it gets sent, it creates a saved copy of this. Also, I'll highlight here a couple of things. In Crossfire, we do document management, so you can compare your taxonomy files from one version to the next, or the instance doc values. It's just a nice way to put everything in one place. And then I'm going to go to the validation report so we can see the overlap and maybe have Campbell explain, if he wants, a couple of these errors. So here, just to summarize, this is run through the Consistency Suite via Rivet's Document Management Center. We can see the errors and the error types. We can see the summary of the numbers that occurred. Here you can see the 2 times I used the wrong calculation weight for that cash flow item. I can see an additional set of errors because there's this invalid member axes combination, which Campbell spoke to. In the negative value check section, I can see when I scroll down, I'll see that this is because of negative dividends. And then there's a couple of other ones. We don't have to cover them all, but it's another way to get a validation and a nice report. You also have the ability to print it, save it for your work papers, and just have your validation report. With that, Campbell, is there any errors you'd like to specifically point to or evaluate, or at this point would you like to take questions?
Yeah, well, just quickly just go through that. A couple of things. Yeah, obviously it's picking up the same things that you guys picked up. It's also, we talked about the invalid access member combination. And actually here is the parent member one that we talked about earlier on the call. So just that there's an incorrect axes used when defining the when defining this in the company's filing. So that appears a number of times. They've broken it down with parent member rather than using the parent company member. We report this out for every individual fact value, so you kind of everywhere you need to replace it in the file. You scroll down a little bit further. Thanks, Jordan. No, just past the invalid access members. I think there was another one. Just scroll down a bit further. Keep going. We also look for some scale errors as well. You can see here one of the other large problems that are in filings is people getting the scale wrong. So we try and look for that too to make sure that they've got the numbers that are appropriate for the size of the entity. We also look for where required values, we would expect them. If it's a public filer, we would expect EPS is required to be reported under GAAP, so we also look for that as well. So in a lot of ways, these checks go a little bit further than just making sure your XBRL is correct. It goes to the extent of saying, look, we know that a filing needs to have all these components to it. So then it's kind of we end up finding a lot of errors which are actually not not problems in the XBRL, but are actually problems in the HTML filings as well. So we've had a number of companies who have had to go back and say, oh look, we probably should be changing our filings. We're actually not in compliance with GAP with what we're doing here. And the reason for that is we've just basically written in about 14,000 rules, which is a set of constraints which we know a typical SEC filing has to be within. We can't check for all those conditions. The only other thing to add on to that, Jordan, is just in terms of the assets. One of the things we try and do is try and eliminate false positives. So in terms of things like where there are eliminations, we check if it's an elimination, then we know it can be negative, and we check that that's okay. And in fact, we also check if you've got an elimination and it should be negative, we check that you haven't put it in as a positive. So Jordan, I think, do you have anything else? Good questions.
Nope, there's 2 more polling questions, and then there's a number of questions to address from the viewers. So let's do the 2 polling questions really quick. The first one, or the next one, I should say, the 4th question on here. I'm going to launch it. And it's just asking, after you've seen the examples of validation, I know I sped through that in the demo portion, but you saw the examples through the slides, you saw them in the presentation. After seeing those, what does your current solution consist of? Does it do document integrated validation? And that's just to say I can double click it and I can go see it in the document. Does it do validation for Edgar Filer manual, like we saw for inverting the sign of dividends? Does it do XBRL 2.1 validation, like we saw for correcting or the calculation errors themselves? Those are examples. Option 3, and check all that apply. That'd be great. The next one, validation against US GAAP concepts. So you saw a little bit of that in Crossfire, and you saw a lot of bit of that in XBRL US Consistency Suite. Or does it have prevention methods that stop you from doing certain things? Or maybe you don't know. And so people are answering here frantically. It's looking like a good mix of everything. A lot of people don't know, and that makes sense if you don't do the XBRL. Yeah, it's a spread of everything. So maybe most of the people answering have all the options at their disposal. So for the next polling question, I'm just going to close this one. Just one more polling question. And this is to gauge the effectiveness of trying to do a CPE on validation. So after after this session, you feel like XBRL validation can be handled effectively by tools. So do you think it is being handled by tools, or the tools helping? Do you think you could actually do some of this on your own? The second option, I need to go through more training to do validation, and that might be product specific, but hopefully you could see how we can read an error, find out where it's applied, but maybe you need a little bit more training. Somewhere in the middle, like, you kind of get how the validation's working, you get where it comes from, and then the last one is you don't know. And actually, I think we're getting a lot of mixed answers, and a lot of people saying, well, I need a little bit more training, and a fair amount who say the tools are handling effective today. So thank you for those answers. And now we'll move on to questions, because I got a few really good questions that will be a value add for sure. So I'm just going to close. It looks like most people answered. I'm going to close this one. So one question was, so you talked about the Edgar Filer manual and said contact us if you want to know where it's located. I'll just quickly show you where it's located. So if I go out to the sec.gov, you will see that there's an XBRL filers section. And this is going to have more information. If you don't have this link, it's a very good link. It's http://xbrl.sec.gov. And part of this is the technical, again, it seems pretty technical, but the Edgar Filer manual. You can go to it, and there's 3 volumes. And what you want is you want volume 2, version 22 with the new updates, which we covered in the slides, and you want to read section 6 for interactive data. So I hope that helps. On to the next question. There was one. Who's doing this, and do you expect us to know all of this? I think that was during the demo portion. And no, we don't expect you to know it. We're just trying to probably show you what it looks like in real-life application. I hope that helps. It's lots of things. There's only portions that the accountant needs to know, and software needs to cover a lot of the other areas. Campbell, here's one I think could be geared towards you. Where would we go if we wanted to see definition of an axis to determine whether it was correct?
Yeah, so what you can do is you can look at the taxonomy. Every axis has a definition associated with it, and the FASB has a number of members that they've already put on those definitions, and that's a pretty good guide of the members that are applicable to an axis. The FASB has the taxonomy available on their website. It uses a software called Yeti, so you can view the taxonomy, and then you can look up the axes or the categorization that you're breaking a line item down by, and then they usually put a number of members on that axis. So one of the things you want to do is you just want to make sure, so for example, if you have a geography axis, if you look at the definition, it tells you how you should be using that axis, and then you want to make sure that you put a geography member on that axis. Just one thing that people should know, there are a couple of axes in the taxonomy which actually have all the members predefined. Geography is one of them. This is also a big problem in filing. Companies are creating their own geographies for countries and states. The US GAAP taxonomies include every single country and every single state. If you find yourself creating a member for those things, don't. They already exist in the taxonomy. You can just include them in your filing.
We're at the 10 o'clock point. We're going to continue just a little bit longer to get a couple more questions, but feel free to hop off, and the survey questions for the CPE should pop up. Just a couple questions left. There's only two really. One, how does Rivet software address these types of validation? Are the types of errors previously discussed detected using Rivet software? The answer is yes. We do cover as much of as much or all of 2.1 specification or of EFM that can be done programmatically. And for those things that can't be done by a machine, really, we try to provide plenty of warnings to warn you of something that needs to be looked into. And then the other part of our product is the ability to review it. So we do a lot of training to show you how to review those things that can't be validated for. And as you remember on the right-hand side of my screen, I had some of those details. But I don't think it's all in there, but it's going to be different levels between different vendors. You can see that Rivet has some US GAAP, some EFM, some 2.1. But we also want to give you total assurance and encourage you to use something like XBRL US's Consistency Suite. And that's why we've incorporated it into our product. One more question. Oh, again, for Rivet full service customers, do you put our files through the XBRL US Consistency Suite? Campbell or I could answer this one. You have to subscribe to XBRL US's Consistency Suite. And I think, Campbell, you have the details of that subscription, right? It's like, I don't know, we don't need to talk about prices, but it's like one.
Yeah, so what you do with it? Yeah, so if you subscribe to it as a company, anyone in your company can use it. It's unlimited access for a year. In addition to that, you get access to our staff as well, so you can ring us and ask questions. We actually get a lot of people when they get find problems in their filing, ring us up, and we'll go through a lot of those areas with you, explaining how you can rectify it if need be. There's about 200. It's about 200 of the Fortune 500 companies use it, so there's quite a broad use in the Fortune 500 for companies that have been filing for a while, and they find it very, very useful for things like the footnotes. We cover all the elements in the detail for the footnotes, and that's where some of the stuff starts to get quite tricky. So it's well worth using. The other thing that you also get is you get access to all the data that's been filed in XBRL. So we give you access to the XBRL database, plus also you get discounts on conferences and training and all that kind of stuff.
Great, thanks, Campbell. And for the Rivet users or want to be Rivet users, what we've done is, we have the preparation side, and we wanted to make it as easy as possible to get into the consistency suite, have a place to manage the documents, and so we've incorporated that into our content management center. So that's it, Campbell. And Michelle and everybody over at XBRL US, thank you for joining us. Thank you to all the attendees for joining. And a special shout out to the Rivet marketing team for putting this all together. This is kind of our go-to last slide that we'll send out to you. If you click the link, it'll send you to our website and show you some additional tools for reviewing quality. So thank you all. And with that, any last words, Campbell?
No, thank you very much, Jordan. And hopefully we'll see you on another webinar soon.
Absolutely.